In this episode, we'll take a closer look at the New York Manipulation Daily Profile. I'll explain what it looks like on the charts and how you can use it in your trading. So, let's get straight into it. Now, once again, to properly understand daily profiles, you first need to understand the kill zones and the sessions. If you don't understand how price behaves during specific session windows, it becomes very difficult to build a consistent daily narrative. Normally, we divide the day into Asia, London, New York AM, and New York PM. Each of these sessions has its own characteristics, its own volatility, and its own role in shaping the daily candle. However, for this specific model, we're not going to focus on all of them. We're going to narrow our attention down to London and the New York AM session. The reason is simple. London often sets the range and manipulates liquidity, and New York AM is where we typically see the real expansion and continuation. When you understand how those two sessions interact, you can structure your trades around them instead of randomly trading throughout the day. So for this framework, London and New York AM are the only sessions that matter.
So what does a New York Manipulation Daily Profile actually look like? Essentially, it forms in a very simple structure. It will either be an open, push to a high, then a low, and close, or an open, push to a low, then a high, and close. In other words, price will expand in one direction first, take liquidity, and then reverse to complete the daily candle in the opposite direction. Now, this simple drawing doesn't really give the best depiction of what's actually happening behind the scenes. It looks clean and basic on a static diagram, but in real market conditions, it's going to be much more detailed and structured. So instead of just looking at the drawing, let's drop down to the lower time frames and break down what this actually looks like in live price action. You can see here with a bullish New York manipulation profile that London either consolidates or simply fails to reach a higher time frame PD array. There's no meaningful delivery into a key level during London, so there's no real reason for a reversal to form at that time. Then as we transition into New York, price manipulates the established range. It may run the lows, take liquidity resting inside the range, and create the illusion of continuation lower. After that manipulation phase, we get a change in the state of delivery on the lower time frame. That shift is what confirms that the manipulation is complete and distribution is beginning to the upside. So when you look at it structurally, this is a clean depiction of the power of three model: accumulation during London, manipulation during New York, and then distribution in the intended direction. Similarly, on the bearish New York manipulation profile, the structure is the same, just flipped in direction. During London, price is either consolidating within a tight range or pushing higher but failing to reach a significant higher time frame key level. There's no real delivery into a meaningful PD array, so there's no reason for a proper reversal during London itself. It's simply building the range and setting up liquidity. Then, as we transition into New York, that's when things start to change. New York will manipulate the established London range. In a bearish example, that usually means running the highs of the London session, or taking buy-side liquidity resting above the range. This move often creates the illusion of bullish continuation, drawing traders into longs right before the reversal. After that manipulation phase, we drop down to the lower time frame and look for a clear change in the state of delivery. Once we see that shift, where bullish delivery transitions into bearish delivery, that's our confirmation that the manipulation phase is complete. From there, distribution begins to the downside. So structurally, it follows the same power of three concept. London accumulates, New York manipulates the range, and then price distributes lower. Now let's hop into TradingView and look at a few real examples so you can see exactly how this forms in live price action. Moving on to the charts, here we have our first example. The first thing we need to do to follow this daily profile system is identify the sessions we're trading. So we start by marking out the time windows. Here we mark the London session from 2 a.m. to 5 a.m., New York time. After that, we mark the New York Open. The pre-market opens at 8:30 a.m., but personally I prefer trading the 9:30 a.m. market open.
Now that the sessions are marked, the next step is to identify the higher time frame key levels. In this case, we have this high, and we also have this low sitting below the discount area. These are the levels we're going to treat as our higher time frame liquidity points. Once those levels are identified, we ask the next question. Does London sweep any of them? Looking at the London session, price does not sweep the high or the low during that window. There's no meaningful liquidity taken inside London, so there's no setup yet. Because of that, we shift our attention to the 9:30 New York Open. As we move into 9:30, you can see that price sweeps the London session lows. Those lows now act as our liquidity point, and since they are part of our higher time frame key levels, this sweep becomes significant. After the sweep, we drop down to the lower time frame to look for confirmation. On the lower time frame, we get a clear change in the state of delivery. That shift tells us that the manipulation phase is likely complete. At that point, we can enter directly at the CISD, place our stop loss below the low that was swept, and target the opposing side liquidity, which is the buy side liquidity resting above. And as you can see, price moves very cleanly and directly into those targets. That's how you use the New York Manipulation Daily Profile. London sets the range. New York manipulates the higher time frame key level at the open. We get lower time frame confirmation, and then price distributes into the opposing side liquidity. Now let's move on to the second example and follow the exact same process. The first thing we always do is mark out the time windows that we're going to observe. So again, we mark the London session and then the New York Open that we plan to trade, which in my case is the 9:30 a.m. Open. Once the sessions are marked, the next step is to identify the higher time frame key levels. So we ask ourselves, what levels are important here? In this case, we clearly have this high and this low. These are going to act as our buy side and sell side liquidity levels. Now we ask the next question. Does price sweep any of these levels during the London session? Looking at the London range, no. Price does not sweep either the high or the low. So there's no setup yet. Because of that, we stay patient and wait for the 9:30 open. Now as we move into 9:30, we watch closely. Does price sweep any of those higher time frame key levels? Yes, it does. Price sweeps the lows. Once those lows are taken, we immediately shift down to the 1-minute time frame to look for confirmation. What are we waiting for? A change in the state of delivery. Do we get it? Yes, we do. Once that change in state of delivery forms, that becomes our entry trigger. We can comfortably enter at that shift, place our stop loss below the low that was swept, and then target the opposing higher time frame key level above, the buy side liquidity. And as you can see, price moves cleanly, smoothly, and directly into those highs. This is exactly how this concept is meant to be used. Mark the sessions, identify the key levels, wait for New York to manipulate them, wait for confirmation, and then execute. If you apply this consistently, it can really help structure your trading and remove unnecessary guesswork.
All right, so that's going to wrap up this model. You've seen multiple examples now, and the process stays the same every time. Mark the sessions, identify the higher time frame key levels, wait for London to set the range, and then let New York manipulate those levels. Once you get the lower time frame confirmation, you execute and target the opposing liquidity. There's no rushing and there's no guessing. If London doesn't sweep anything, you wait. If New York doesn't give you confirmation, you wait. The consistency comes from following the model exactly as it's laid out. This is how you're going to use the New York Manipulation Daily Profile in real market conditions. If this helped you, make sure to like the video and subscribe for more ICT-based session breakdowns. Join my Telegram and Discord if you want to connect. Check out the mentorship link if you want to learn personally from me. And don't forget the funded account discount codes in the description. Trade safe, stay disciplined, and I'll see you in the next one.